Jeremy Newsome, y'all. So he's going to talk to us all about how we can get basically up to 30% and beyond annual returns with the stock market and crypto assets and all things just investing our hard-earned dollars into vehicles that will produce dividends and cash flows.
Do you want blissful balance in your personal and professional life? Great. What's up, guys? My name is Kerry Jack, and I want to help you happy hustle a life you love, one full of passion, purpose, and positive impact. I'm a lifestyle entrepreneur, a professional model / actor, a digital marketing specialist, a podcast host, author, a biohacker, an eco warrior, a martial artist, a hippie cowboy, and a humanitarian. My goal is to educate, inspire, and entertain you to live a life of passion, purpose, and positive impact. It is time to happy hustle your dream reality.
So I hope that intro did you somewhat justice. I know I could go on for a lot longer, Jeremy, but Jeremy, the floor is yours. I'm going to pin you on the meeting. And if you want to share your screen, you can do whatever you'd like.
Yep, I'll be doing my screen share in just a moment. Thank you, Kerry. I appreciate it, gentlemen. Oh my goodness, I'm so pumped. I'm so pumped. My main objective of this call is just to change your mindset and beliefs about what's possible. That's it. My whole mission in life is to enrich lives with mentally liberating education. So if one of you learned something brand new today, I'm very, very happy. Now, I want you all to know that Carrie and I had a pretty brief conversation about this, but we talked about this a few months ago, and I have an amazing sales presentation. That's not what I'm going over today. He said, bro, just pull out the dirt. These people are smart. So if it's cool with you guys, I'm just going to get into it. I'm not going to do the whole like NLP, building the story, the pre-frames. I know how to do all that shit. I worked with Russell for a long time. Like I'm really good at sales. I love sales. I love money. But is that cool if I just go tactical and
Let's
hard
go.
with my boys? Is that
Let's go.
sweet? All right. Here we go. I'm going to do a screen share. And one of the things I want to just tweak your mind with is I understand that buy and hold does work. I'm going to say that very, very clearly. Buy and hold in the stock market works very well, but it doesn't work well for cash flow. Type in a 9 if you want more cash flow in life.
Put a 9.
Everyone's putting in 9s, right? We all want more cash flow. You see, buy and hold is a very good strategy for extremely long-term wealth creation. However, there are new ways. You see, my last name is spelled Newsome, and there's an N-E-W in there. So my goal is to teach people things that are new. So the old way would be just buying Disney at 95 and leaving it alone for, like 7 years. Disney's going to go up. Oh, it's a great company. I'm just going to buy it and just leave it alone. This is not an amazing return, but the truth is a lot of your parents and maybe even some of you probably have Disney and you've probably been holding it for 12 years. And this is probably the return that you have on Disney. It's not really that substantially incredible. But what if you just simply realize that you did have the ability to interact with second grade math? Type in a 2 if you got an A in second grade math. Here's the thing, gentlemen. When I talk to people about the stock market, and remember, Kerry was very, very kind in the introduction. I am one of the most foremost experts on the stock market as far as just teaching it and interacting with it. There's a million people who are way better at trading than me, or more profitable than me, and they can day trade better and have more money. That's amazing, but I'm really, really good at teaching it because I love doing it. I love trading. I've been trading for 20 years. I love teaching it because I have a teacher's heart. If high school history teachers made $600,000 a year and could do whatever they want from wherever they want to in the world, I'd probably be a history teacher. But ultimately, I do teach history, and I teach the history of the markets. And what we're looking at right here is just the ability to recognize that if you bought Disney, or you would have bought it anyway, and sold it at a higher price, you guys have heard the term buy low, sell high. And then you repeated that exact same process, the same price 3 times. It's a 53% return in 1/118th the time.
Mm.
So instead of holding it for 8 years, you're able to just interact with the price action and create cash flow faster. Now, Disney might have been not the best example because it's slower and it's older. And, okay, what about General Motors? And I gave you the bottom of GM, by the way, like the very, very bottom back in 2012. If you bought it at 21.50 and held on to that bad boy, right, you're looking at a 60% gain. Not that bad. I will agree, 60%, it's not bad, but it is kind of bad over a decade.
Mm.
Okay, that's another awareness, another interesting piece. So again, imagine that your mind just simply said, I know how to do math. And I know that if I buy 1,000 shares and those shares go up $3 and I do that 200 times a year, how much profit is that? Who can do that math with me? 1,000 shares on any stock in the world, doesn't matter. And the shares go up $3. Is that 3,000? Yes or yes, gentlemen?
Mm-hmm.
It is. Okay, what's 3,000 times 200, Grant?
Grant's a math guy. He should know this.
600,000. Sorry, my mute.
Exactly. A lot of people initially think it's 60,000, but it's actually 600,000. I think that's pretty amazing. Type in a 6 if 600,000 extra dollars a year would change your life, or change your kid's life, or change your parents' life, or change your brother and sister's life. I love money because money is the expansion tool of the heart. So for every one of my amazing men out there, if you have a great heart, you want to give more, you want to live more, you want to be more, you want to buy more, you want to do more, it costs more money. And please keep in mind that money does buy happiness. Don't let broke people tell you that money doesn't buy happiness. I've never seen anyone frown on a snowmobile, not a single person. Now, money might not buy sustained happiness, but money can absolutely buy short-term happiness and short-term excitement. Every single person who's going to carry in the Montana trip, are you going to be happier? Yes or yes? The answer is yes. It costs money and it costs time. So my thought process is money will solve all of your money problems. So if you have money problems, make more money. The stock market is the greatest way that I've ever experienced in my life to create more money. Because the thing is, in business, I love business, but business has what? Invoices, refunds, customers, funnels, acquisitions, taxes. Everything has taxes, problems, employees. Anyone out there have employees? Oh boy. Right. I sold my company. I know about employees. Oh boy, they're fun. But what if you didn't have to interact with any of that? What if it was just you in the markets? Right? What if it was just you actively looking at for, 3 to 5 hours a week? I know that's a lot of time. I know. I get it. I understand that 5 hours a week is like a crazy, like there's no one here has a 5 hours a week that they can dedicate to making an extra 600,000 a year. I realize that. But if you did, imagine you did, you would have the ability to create more income. Because there are going to be situations like on Kohl's where you buy something in 2000 and it's the exact same price it is now. That also happens in the buy and hold. You see, people forget to tell you that. A lot of people say, oh, just buy and hold Microsoft or Apple or Amazon. Yeah, those three were awesome, right? But if you start picking like other companies like Verizon or AT&T or Ford or Macy's or Nordstrom or fucking Kohl's, which that's the place that Jordan shops the most. Jordan's a big Kohl's Cash fan. If you buy Kohl's right in 2000, like you're at 0%. It didn't do anything for a decade. But if you just simply understand the process of buy low, sell high, and you understand the second grade math component that if I buy companies and those companies go up and I sell those companies for a profit, I can create more cash flow. That is a realization of awareness that is very, very true mathematically. Now, here's one other really, really cool thing I want to keep you in mind. The companies that I'm trading, family, the Teslas, the Apples, the Nvidias, the Googles, the Amazons of the world, what do they all have in common? And the answer is they're humongous, right? I trade the top 40 largest companies in the world. That's really what I focus in because they have so much money that it's almost a countable infinity, right? Tesla has $36 billion in cash stockpiled. Apple has $297 billion in cash. Apple makes $90 million of net profit an hour. An
Whew,
hour.
damn.
Walmart has $187 billion of revenue a quarter. Google does $89 billion a quarter. Guys, I'm really good at business. I'm not that good at business. So one of my mindset shifts was, why not I just give as much of my money as possible to the companies that make a lot of money? Because what's going to happen if that company makes a lot of money? What's my money going to do? It's going to grow. Is it that easy? Yes. It's that easy. Like, buy good companies. Now, my favorite part of this presentation is where all of you guys start to think, all right, well, this is so easy. How come everyone doesn't do it? And one of my favorite quotes, because it's easier not to. Would everyone agree here that eating healthy and having a great diet is actually pretty easy? It's a lot easier not to, though, right? Nick, is it easy to go to the gym 5 times a week? Yeah. Is it a lot easier not to? Yeah.
If he could bring his bourbon, he would go.
That's right.
About
That's
to drink right now.
So the thing is, losing terrifies individuals. And what I want to share with you is something that some of you may know, a lot of you probably do, but I promise that one of you doesn't. And it's okay, by the way. The thing I'm about to share with you is game changing. Because once you know the skill that I'm about to share, you can protect any amount of money in the markets. Because what most people do is they put $10,000 into the market and they're like, all right, that's good enough. And they just kind of hope and hope it works out. Or maybe they put in 100 grand and they're like, all right, cool. Fingers crossed. I hope this works out. Like, that's good. But if you understand how to protect losses at a mathematical level and you realize the size of these companies like Apple, Google, Nvidia, Amazon, Walmart, Costco, Johnson & Johnson, Procter & Gamble, Pfizer, T-Mobile, when you start understanding how many billions of dollars of profit and revenue they create monthly, you're like, well, why not I just put all my money into the position? Because check this out. You guys ready? Did you know that there's something called stock market insurance? All right. Grant didn't know that. Sweet. Stock market insurance, right? Does everyone have health insurance here? Of course you do. Life insurance, of course you do. Car insurance, of course you do. House insurance, of course you do. Why don't you have stock insurance? How come no one's protecting your downside on stocks? Because you don't know how. You've never heard of it before. By the way, everything I'm teaching, Brian and Ryan, you guys can use this in your IRAs, your 401ks, potentially, your Roth, your SEPs, your business accounts. Can businesses buy stocks? Of course they can. So you can take all the money that you make from your business and your businesses can buy assets, making your business what? More profitable. So now what I'm going to do is walk through for the next 23 minutes is talk about options. Now, again, I'm going to go a little bit fast, but I'm getting tactical. I'm getting into the weeds. I'm actually going to share with you some actual numbers and some insights. I'm not going to give you the sales fluff so that you buy my product, okay? Options are insurance positions. That's what they are. This is the Investopedia definition. If you need to take a screenshot, feel free to. In my terms, options are stock market insurance because stocks do 2 directions. They go down and they go up. That's what they do. Now, are there people that bet on both positions? Are there people that buy stock? Yes, of course. Most of you buy stock. But there's also weird, strange people out there like me who will also short stock, which means they make money if it goes down, right? Now, if you're like, how do you make money if something goes down? Another thing for another question. But the good news is, regardless of what you're trying to do, what I'm going to do is talk about the position of how you can protect an asset. of any size. Let me say that one more time, Scott. If you have $25 million into Tesla, you're not even a crumb on the baker's floor of the cookie castle. Tesla moves $80 billion a day of US currency in and out of the stock market every day. 80 billion. 80 billion with an L. 80 billion. And that's Tesla, one company on one market on one exchange. 80 billion. Is your 25 million anything? No. Literally no. It's nothing. It's not a booger on a fly's ass. Like, it is like so small. So when you start thinking about the size of abundance, you're like, wait a minute, I can have as much money as I want in the market if I can insure it. Yes. So let me talk about put options, my men. A put option is the right to sell the stock at a higher price. This again is the Investopedia definition. If you want to take a screenshot, you're more than welcome to. Here's my terms. A put option goes up when the underlying stock goes down. It is an insurance position for long stock. Long stock, Alejandro, means you bought it and you want it to go up. So a put option goes down when the underlying stock goes up. Buying puts allows you to protect your downside on any position. All right, so we're going to do some examples here of what's referred to as protective puts. You guys are going to love this, Grant. This is going to be the coolest thing ever. A protective put is when you own the stock and you want to protect your downside. Meaning you buy one of these insurance contracts and you can protect any investment size on the vast majority of companies that exist in the US stock market. So when would a happy hustler use a protective put? Ideally, the number one goal and objective is to buy a protective put at a price and location where mathematically it's hard to lose money on the underlying stock. Now that's really cool, like verbiage, but type in a 1 if you would like some visuals. All right, let's do a quick visual for a second. My boy Eric buys 1,000 shares of DraftKings at $36,000 on January. Quick pause. This is a real example. I don't think Eric did it, but I did it. Would anyone like to tell me why DraftKings would go up heading into February? Is there like a specific
Super Bowl?
Oh, weird. Strange. So, do you think there's a pattern there? Do you think DraftKings goes up a lot headed into like big sporting events, maybe like March Madness or the Super Bowl? Like, is that a possible? Is that? Do you think there's seasons and patterns in the market, gentlemen? Yes or yes?
Mm-hmm.
There are, right? Just like Starbucks goes up when they announce the pumpkin spice latte comes out again, right?
Mm-hmm.
It's certain patterns that can repeat over and over. I'm not joking, guys. This is very serious. I am money serious right now because DraftKings goes up a bunch headed into big sporting events. So Eric buys 1,000 shares of DraftKings at 36 in January. On February 14th, hashtag a month and a half later, DraftKings is trading at 51. Remember, second grade math. Eric goes out and buys a March 17 put option with a $42 strike price. 42. So as a reminder, when you're buying a put, this represents the price at which you can what? Where you can sell the stock. So factor this in for a second. Eric bought the stock at 36. He's spending $3 on insurance to sell it at 42, and the stock is trading at 51. So if you take the cost basis, aka the insurance cost of $3, is that CapEx? Yes, right? Everything that works in real estate and business works in the stock market, by the way. It's the best, right? All of your terminology and all the things that you guys do for money works in the stock market. So $3 plus $36 is what? $39. And he has the legal ability to sell the shares at 42. What's his risk? Zero. The dude has no risk. He's legally allowed to sell his stock for higher than he bought it for. This is amazing. This is remarkable stuff. In fact, I'm gonna do a really quick screen share. I'm doing that now, but I'm just gonna pull up the stock chart and we're gonna go look at, again, the visual representation of what actually happened here on DraftKings. Give me 8 seconds. All right, so here's DraftKings. So again, you'll notice on DraftKings, I know we got some lines on the screen and a lot of this is like, what the heck's happening? That's okay for right now. But just pretend that you're like, oh, in January, I bet I knew that, the Super Bowl is coming up. I bet I would have known that. I probably had a calendar of like when, college football championships would come up or like the Super Bowl. Like I think I could kind of plan that ahead of time. And you bought in January. Can you all see, type in a 1 if you can all see that DraftKings went higher?
Mm-hmm.
So again, the real example is if someone bought it in the pink arrows and when it was up here in the green arrows, could the stock have gone higher? And the answer is, of course. We can see that it actually did not go higher. In fact, it did go down after Valentine's Day. Because again, for right now, there's nothing really happening in the sports world until March, hashtag, March Madness. So you have this really, really, really interesting push up on DraftKings. Could the stock have gone higher? The answer is of course. But once the stock starts going up and you can buy an insurance policy higher than you bought the stock for, what does that mean? It means mathematically that you create an unlosable position for the time period that you own the insurance policy. How many times in a stock market presentation have you heard that you can create unlosable positions? The answer is you haven't. Probably no one has the stones to tell you that. But I do because I've been doing it for 20 years and this is the math. Now, also I do know this, that I've never in my entire life heard my financial advisor got me rich. I've also never heard that, ever. So what I do know is that who's going to care the most about your money? You. All right, gentlemen, you're going to care the most about your money. So it is one of these situations where it is important to at least understand and visually see and know how a lot of these buttons work and how it actually plays out because it's really, really crucial. Now, I don't always win. In fact, I probably win a little bit less than I lose, but it's very, very close to 50-50. I'm a professional coin flipper, but I lose less than I win. So I take that net spread. This was a stock that I got absolutely murdered on in 2022. I did have a put, but the stock went down a lot. So this was Shopify. And this is a stock chart of Shopify from 2019 until just a couple of months ago. By the way, Shopify will go back up to 170 in the next 2.5 years if anyone here is interested. It's about 107 right now. So just throwing that out there. If you like a stock pick, Shopify is one of them. All right. Okay, just again, for interactive purposes, type in a 7 if you can see how big Shopify dropped.
Mm-hmm.
Right? So Shopify had a huge, huge drop. We know what Shopify is. A lot of you use it. A lot of you have business with it. But what we can visually see is it had a humongous drop. So imagine, and this is what happened to me, is when Shopify was down here and you drop a couple of F-bombs, you're like, dang, that sucks. Now I have to hold it for another 3 years for it to go back up. Imagine if you had an insurance policy that after it dropped, you could say, oh, let me sell it at a higher price now knowing that I can. Guys, is that sick or is this insane to anyone else other than me? I mean, it blows my mind that the vast majority, I'm talking 99.9% of people that have money in the stock market, including your money managers, gentlemen, are not doing this. Unless you're in a very advanced hedge fund, they're not doing this because they can't legally. You have to have a hedge fund in order to do these types of instruments. Mind-blowing. But if you're an individual trader and you're trading your own money, you can do it. So I'm going to read this really quick because there are risks of protective puts, but they're all based on emotion generally. The risk is the stock trades sideways and you pay that insurance for nothing. In fact, I think you guys do that anyway on your car and your house, right? Every year you don't wreck your car and your house doesn't burn down. You don't run out of your house going, I freaking hate that I paid $1,800 in insurance. Dang it. Why didn't my house burn down? That sucks. Right? You're not doing that. The insurance is there to protect you. I think we all understand how insurance works. So the other risk of the protective put is the trader closes out the protective put before expiration for a gain on the put itself. Obviously, the other one is you close out the protective put for a loss. So you can lose money on this instrument. So there is a math component to understand how to do these trades. But ultimately, the biggest risk of a protective put is this one. At expiration, because every insurance policy has an expiration date, right, gentlemen? All of them. If the stock closes below your strike price at expiration, the broker will auto sell your shares. So if you do not want that to happen, you have to understand how expiration dates work. They're not scary. They're very, very easy. You just need to make sure that you know how to press the proper buttons. So I'm just letting you know that there is that risk that if you don't want to sell your shares because maybe you're a shareholder, maybe you own 10% of the company, maybe you don't want to sell for tax purposes, maybe you want to hold these stocks forever for your kids, but you're just having an insurance policy so that you can make money on the downside, AKA cash flow, then this is a really, really cool system. Because again, this is really what I'm talking about. I'm talking about buying the biggest companies in the world with your money, letting the companies go up over time, and then insuring your position so that if they drop, you can create what? Cash flow, even if they're dropping. Now, one other question. How come most people do not buy insurance? Not even stock insurance. If you listen closely, right? Not even stock insurance. Why don't people buy insurance? Because it costs money. People, for some reason, hate spending money on things. They just don't like it. One of my quotes is, if it's free, would you do it? The answer is yes. Go pay for it then. Right? Because that means you're just scared of circulating the money. Most people do not like to pay for insurance because they don't like to pay for things. Now, if I was going to have a sales pitch, this is where it would be. Would you like to know how you can get paid in the stock market to buy the insurance? Meaning, not only is the insurance ultimately free, but you'll get paid to buy it. Now you're just pulling my leg, Newsome. No, I'm not. Let me introduce you a strategy called the covered call. The covered call is one of my favorite strategies because this is rental income for your stocks. Yes, you heard that correct. Rental income for your stocks. I mean, all of you know that you can rent out your stocks and create monthly income, right? You all already knew that. Just like if you have multiple houses, right? If you have two houses, you live in one and you're renting out another one so that you can be Nick Hernandez, right? Your goal is to create a bunch of cash flow. But if you have over 100 shares of stock, you can rent out that stock, bring in cash flow, and use the cash flow to buy an insurance policy. Yeah, that's right. It's flipping awesome. So let's talk about what a covered call is. This is, again, quick little definition. But ideally, the number one goal and objective of selling a call option is selling at a price where the stock is unlikely to go. But if it does go there, guys, you're getting paid to sell your stock at a higher price. I'm gonna say that one more time for those in the back. In the stock market, you can get paid to buy an insurance policy to protect your position on the downside and get paid to sell your stock higher than you bought it for. What? I mean, I just think that's the most remarkable thing of all time. And you still have no employees or no refunds or no chargebacks or no shipping processing orders or no supplyment issues. I think it's just the funnest thing in the world. So here's some math. Let's talk about my boy Tim. Tim owns Apple stock. Hashtag, they make $90 million in net profit an hour. Why would you not own some Apple? On February 25th, Apple is trading at $248 a share. This is a real-time quote, right? Tim ends up selling an April 21st covered call with a 260 strike. So what that means is he is renting out his stock at 260. Can anybody remind me of what price he bought the stock at?
248.
248. So Tim is going to bring in a net credit of $1.80 per 100 shares to rent out his stock at a higher price. Is that wild to anyone else?
What the net credit? Can you explain that real quick? The 180, where's that math come in?
Yeah, I'll actually show you.
Okay.
Give me 4 seconds. Does anyone ever heard of Yahoo Finance?
Yeah.
So let's pull up Yahoo Finance really quick. And what I'm going to do is I'm just going to show you where this stuff resides for just a moment. So when I say resides, we're going to go type in Apple under the quote lookup. I'm going to pop up Apple really quick. All right, so everyone can see this is Apple. Now this example was taken like 48 hours ago because I was building this presentation for you guys. So the numbers might not be perfect right now, but just keep in mind this is where you get it. All right, so everyone's probably looked at the screen at some point and you're like, I don't know what the heck's going on. This is all just stupid numbers. I help people understand what the screen means very, very, very in depth. But right here, does everyone see where it says options?
Mm-hmm.
Yeah. Let me click on that. And once I click on it, you're going to notice right here, you see where it says calls? Again, the reason the strategy is called a covered call is because you are selling call options. You're selling call options. And when you're selling call options, that means that you're renting out your stock and someone's paying you to buy your stock from you at a higher price than you own it. So what I'm going to do is I'm going to change this expiration date to what? April, right? You guys remember the example? I said that Tim was going to sell out his April position. So if I click on April, you'll notice where this says strike right here. This is where I am agreeing to sell my shares of Apple. And if I scroll down to 260, right? It says 260 right here. Notice, what are these numbers saying? These numbers are the rental contract amount per 100 shares. So right now at this exact second, if you had 1,000 shares of Apple that were just sitting there and you've had them for 17 years anyway, you can rent out this position at 260. And at this exact second in time with your finger, make $1,860 of net cash flow instantly in seconds by pressing a button. Is that crazy to anyone else or is it just me? This is, oh my God. Don't even get me started on how this compares to rentals or real estate. It's not even close. It's not even in the same ballpark. Like every one of you's done rental stuff before in the past, right? Buying real estate and like renting it out and doing the 1% rule and all that. Like you've all done that already. It's not even in the same ballpark. Because
Is that
again, you
every
got to
day
remember.
you make that, Jeremy? Sorry to interrupt, but every day you'll make 1,800, or is that
No, great
every
question.
month?
So this particular contract is, think about like an Airbnb carrier or rental policy. You're
Okay.
renting this position out until April 17th.
Oh, okay. So that's the net profit for that term.
Yep, exactly, for that term. Now, if Apple, and that's a great question, Carrie, let's say Apple stays at 240 between now and April 17th, you get to do what? Do it again for May or June or
Got
July.
it.
Now, if Apple does go up to 260, there is a good chance that you can end up selling your shares at 260. But if you bought your shares at 240 or any price lower than 260, if you're selling your shares for a profit, is that a bad thing? I don't think so. Right? Because I think the main goal in trading is not to make money. The main goal in trading is not to be right. The main job of trading is to make money. I'm not after trying to capture as much money as I can on Apple or Tesla or Google or Nvidia. What I'm trying to do is figure out how much of these things can I buy and create a position where I minimize my downside risk and give myself as much upside risk as possible, because these companies move numerous percents every single month.
Mm.
Let me do a very, very quick screen share on, and we're gonna go look at Nvidia, because Nvidia has earnings tonight, by the way, tonight.
Yeah.
So
And if
there's
we
gonna be
can
some
get into
really,
questions too after Jeremy, just FYI.
yeah, exactly.
So leave a little
So
room.
let's just say since June, right, May of last year, Nvidia had a 37% increase, 37, and then it went down 37%, and then it went up 49%, and then it went down 22%. And then in the last month after the DeepSeek thing came out, right now, NVIDIA's had a 10% move in what? 1 month. Second largest company in the world. Now, if you know anything about trading and you spent any amount of time with me or any other professional that teaches this stuff, if you bought on the big down move and sold it on the big up move just 5 days ago, you could have made 16% in a month on the second largest company in the world.
Hmm.
I don't think a lot of people realize how much this stuff moves, right? Like you buy it and just leave it alone forever. But it's like, man, if you took $100,000 and just captured 40% on NVIDIA over the last year, which you probably could have done with your eyes closed, 40% on $100,000 is $40,000. It's not bad for pressing buttons. And it ultimately builds, gentlemen, into bigger and bigger and bigger positions. Because again, when Kerry said I made a bunch of money on Tesla, that wasn't on my first trade, obviously. That took me years to build into the position, but ultimately I built into the position where I bought it nice and low. Because the real goal, and what I would love to have everyone in this class, everyone in this presentation, all of you learn at some point, is a strategy called collars. Collars is combining both of the things that I just taught you. Selling a call option to bring in cash flow, using that cash flow to buy an insurance policy on your stock. Because some of you, gentlemen, some of you might already be retired, you don't know it. Some of your parents are probably sitting on $700,000 to $800,000 of stock that they don't know that they could be making $7,000 to $15,000 a month in additional cash flow for free by pressing buttons.
Whoa, whoa, whoa. Apologies for interrupting your programming. But I have to tell you, the best investment you can make in yourself is one in which helps you acquire skills. You've probably heard people talk about, oh, just invest in yourself and you'll be successful. Yes, that's true to a degree, but you have to invest in skills that will ultimately help you achieve your desired results. And I think one of the best skills one can possess, be it an entrepreneur or an aspiring entrepreneur, is the sales sword. Really knowing how to sell, utilizing pressure-free persuasion, which will make you more money and more impact. Now, if you want to know how to sell more efficiently and effectively, I just launched a sales course called The Proven Roadmap Process to Selling Millions of Dollars and helping you to increase your conversions guaranteed. And you can get access to this new sales course that The Happy Hustle is launching at thehappyhustle.com/sales. And if you act fast, you'll get it at the lowest price it'll ever be available, because we are launching it and we want to gain amazing testimonials and social proof to further share this knowledge. So if you act fast, you can get it at the lowest price it'll ever be. That's at thehappyhustle.com/sales. Now let's get back to this episode.
And you can still protect your downside. So again, just to open it up for questions in just a few minutes, a collar is when you have a covered call with a protective put. This is the ability for you to protect your downside and bring in cash flow at the same time. So let's just pick up my boy Brian for a hot second, right?
Can I cut you off
Brian,
real quick? Because I got a hard stop, but I really want more to learn more about your courses and dive into this and just understand where you're at in the market today with Bitcoin dropping and Tesla way down in the last week.
Yes. Message me directly on the Happy Hustle Club.
Okay.
Just reach out to me.
Yeah.
I mean, I'll give you all that because I know you guys are hard stop at 12:30. But the answer is yes, man. I mean, long term, Tesla's a good buying spot, by the way, and Bitcoin has lower to go, but it's also a good buying spot.
I've been buying. I just like trying to understand more. I just know it's low, so I've been buying as much as I can. But
Yeah,
Totally.
and I think the question all of us are sitting here asking is, how the fuck does an average guy with only 5 hours a week or whatever you'd really require get her done and actually do this? I mean, I don't know if anyone else is a little overwhelmed, but I know we had Andy Tanner on. He kind of talked about some of this stuff, and now, I mean, I want to do it. I really do, but it feels like a little overwhelming. So,
It is.
yeah.
In fact, Carrie, it's probably a lot like when you guys first started your business. Would everyone
Right.
agree? When you first started your business, you had no idea what to do. You had no idea what a CRM was. You had no idea what a payment processor was. You just kind of had like to figure it out.
Yeah.
So if you want to figure it out the hard way, you can. Easiest thing to do is just text me, gentlemen, because I would love to open up for questions. I can do that. I mean, because the answer is yes. I realize this is a lot of intel.
Yeah.
The point of me sharing all of this with you is that it's available, right? I don't think a lot of people realize that this stuff is available. Like it's
Right.
accessible. You said the average person. I mean, it's accessible for literally any person on planet Earth. Doesn't matter if you're a felon. Doesn't matter if you're a Mormon. Doesn't matter if you are white, black, Asian, or persuasion. It's like whatever background, social, economic, like every single person can access this. I think that's a remarkable feat.
Yeah.
So to that point, all I'm going to say is if you have any interest, I am going to do a cohort in April.
Yeah.
So just message me if you want to be in it. If you want to party with me, it's going to be cool.
Tell them a
shoot.
little bit more about it, Jeremy, because this is actually basically you're walking people through how to do exactly this, right? Starting April.
Yeah, in April. So I'm going to show you guys the buttons. I'm actually going to force you to take some trades, but I'm going to take the trades with you. So I'm going to show you how to do the buttons. We're going to do a lot of screen shares. I have no earthly idea where my presentation went. It just disappeared somehow. So that's
We can
cool.
put a link to in a
Yeah,
follow-up email.
yeah. I'll show you guys a link. But it's going to start in April. We're going to meet 3 times a week. 3 times a week for 12 weeks, dude.
Damn.
12 weeks. So if anybody wants to do this with me, again, I mean, I'm happy to extend and invite any one of you. Just shoot me a text if you have any interest in this stuff at all. Because here's the one very, very important piece I need to leave you with. And I have tons of time available after this. So I know a lot of you have a hard stop in 3 minutes. Thank you. All I want to say is this. The skill, once you learn it, you have it forever. So to Carrie's point, will it take maybe 50 hours up front to learn? Yeah, right. Give it a little bit of time, like anything else you do in life. If you want to be a triathlete, if you want to run 100 miles, if you want to make $3 million in business in a year, if you want to create a software as a service like Carrie and change the world and pour in happiness and love into other people, that's going to take time, energy, and effort and money. So ultimately, all I want to say is if any of this stuff resonates with you, and I would love to invite you to just message me. I'll send you as much of the details. I'll post a link in the chat pane, all in the WhatsApp. You and your kids can have the skill forever once you learn it. It will never change. It will never go away. This stuff has been in existence since 1973. 1973. So if you're like, Jeremy's teaching me this mystical thing that like he just discovered. No, dude, guys, my IQ is a 108. I've taken the test like 47 times. The stuff's been around forever. I just teach it better than anyone else in the world. So that's my thoughts. Hit me with questions. I got stock picks. I got charts. I'm available for you guys. I'm wide open.
Hey, guys, let's clap it up. Just real quick. Clap it up for Jeremy, guys.
Well, here's something I'll say actually, and I think will actually be good. And it actually kind of builds to number one, Jeremy, this is a good plug for you. Me and Jeremy don't know each other, by the way. I've never seen him before in my life. And so, we're just connecting. But I'll give a plug to also Happy Hustle, because here's why. So I am a traditional investment advisor, right? I'm an investment advisor rep. I've been doing it 16 years. I'm top of the table. I do all that. There's a lot of investment advisor rep that would push against it, right? They would push against it. That's too high risk. That's too this. And you got to do this. Here's the deal. I tell clients, and how I help my clients is with people in the stock market, they're just simply playing a game that no one else knows the rules to. So imagine, right, if you've never seen like basketball, I'm just pick a sport, hockey's one. If you don't understand, what the offsides is, and you don't understand why do they stop the game here sometimes, but why are they allowed to fight, you're not going to win, right? But you got to learn how to play the game. And what I'm seeing, I've been doing this for 16 years, and I help clients with investments. It was funny. I started typing my program in the program, and then you started talking. I was like, wait a second, my ears perked up because I want to hear it. The point is what I will say is in our college degrees and everything we do, like no one's taught us the rules of this game. And we're all so busy with our kids and our jobs that we don't have time to learn it. Make sense? So that is how I teach my clients on a traditional planning, front with all traditional products. And this is just the next level of that. And the nice thing is the two can kind of work together. Like what I mean is I tell my clients there's a yin yang approach. Let's guarantee your bases, right? That way, if we have an apocalypse, you don't have to worry about it because your bases are guaranteed. And now let's take the profit, and that's what we call as your lifestyle determinant, with the market, and if we can really make it fly. So the point of it is as an investment advisor, a lot of the other advisors will tell you to stay away because it's too risky. What I would say is learn the rules to a new game that exists. Take that time because it is a skill, because no investment advisor will give as much attention to your account as you will. But you have to know the rules. You cannot just blindly just trust someone, because guess what? That advisor is looking to acquire the new client. They're not looking at your account every day. That's just human nature. So, I hope that helps, but I see the value in it even as the counterpoint, if that makes sense. And by the way, Kerry, it's a good thing of bringing different people together to communicate that, if that makes sense.
Yeah. Thank you, Rick, for saying that. And it does mean a lot coming from you as the kind of opposite. So Jeremy teaches the rules to the game and how to play it. All right, we'll stay on. I got till the top of the hour, and Jeremy, I mean, I know some of you guys got to drop, but if you got questions, Jeremy, can we?
Yeah, just hit me, guys. Me, Carrie, and Rick, we're here. I just want to pour into you and help you. I know that Grant mentioned like what should we be doing with certain stocks. I can look at stock picks. I can give you my thoughts, my opinions, my perspectives on things. But what the real truth to all this stuff, family, it is math. It is all math, and there's no need to overcomplicate it from there. If you are trepidatious just because you don't know the skill, if you want to watch hockey, watch enough hockey and you'll start figuring it out.
Yeah.
Justin, hit me, Rockstar, with that perfect beard.
Yeah, no, I did have a question for you, Jeremy. So obviously you've been doing this a long time, right? You've been following the stock market. You can tell you love it, right? Like you're diving in all the time. You know the different stocks, you're following the markets. For an average Joe like myself to get into it, it's very interesting to me. But obviously, buying back my time is a huge thing too, right? So like I guess what should a novice or a beginner, kind of think as far as like investment of time in learning these different stocks and learning, the ups and downs and looking at these trends and getting all of that kind of data prepared? It seems like it's kind of a very time consuming thing, unless it's been somebody like you understand the market in and out.
Well, for people that are more time strapped, my suggestion for a lot of people is just focus on one asset, focus on one company, focus on one stock. Because that way you don't have to look at a bunch of things. Because if you have generally it might be a tech company, but it doesn't have to be. If you're focusing all of your time on Costco, Justin, and that's all you trade, it's Costco, you're going to get a pretty good feel for how the thing starts to move over time. And to capture just a little bit of additional cash flow, I'll just go look at Costco really quickly here. I mean, look at these 3 moves that it's had since May, 4 moves actually. So since May, you had this really cool 23% push. Like that's awesome. And you can obviously see this big blue line that it loves to bounce off of. It's called the 100 simple moving average. But if you captured this with any amount of money, you made a 23% return. And if you capture this little move with 15% return, that's a month and a half. Capture this move, 15% return, month and a half. Capture this move, 17% return, month and a half. It's like once you get into the position, your work is done, Justin. That's the good news, right? And if you start just narrowing your focus, because if you heard me earlier, I don't do stock picks, dude. I trade Apple and Nvidia and Tesla and Google and Netflix. Like that's it. And there's a lot of times I'm waiting. Professional fishermen fix their nets more than they fish. Basketball players, Tom Brady watches more the GOAT. Tom Brady watched more film than he actually played football. In fact, he got paid $212,000 to move his arm 180 degrees, right? Like the amount of time he actually played football was like 17 minutes a week. If you think about it. So I don't research a bunch of companies, dude. I just had the top big ones and just figure out if I should buy them or if I should not buy them. And if I do buy them and it goes up, then I'll just get into a protected position and that's it. I'm home free. But you got to learn how to do it. And of course, you can go in really, really heavy on newer companies that have bigger upside, explosive growth. I'll give you one, Reddit, right? RDDT. Reddit's an amazing company. They're going to really, really grow. They had a phenomenal move. Guys, can we just daydream for a second since dreaming is free? Can you imagine if you put in $60,000 into Reddit in August because you did like 9 hours worth of research one weekend and you made 300% return on 60 grand in 5 months?
Wow.
Do you guys all know what Reddit is, by the way? Am I speaking to like a bunch of like, we all know. Do you think that's going to happen again? And the answer is yes. If it happens once, it generally happens twice. There's tons and tons of companies that are still available to go higher in the markets. There's loads of them. And you don't have to do loads of research, but you can also just spend, like I said, some level of interaction where you just know how to do the game and then you go play it. And dude, make an extra 3% a year just because you know how to press a button a little bit faster and a little bit cooler than you used to. Is it worth it? It's like, maybe, probably. Why not?
Yeah. 300% returns. Where do you get that elsewhere? You know?
Especially if we're not doing anything.
Right. You're not like hammering a nail. You're not dealing with customer service. It's very attractive, Jeremy. I got to say, I got a little chub, a little money chub.
Yeah, love it. Scott, do you have a question for me, you gorgeous man with your perfect hair? No, you're good. Drew, Ryan,
Jason, Blazer.
hit me, Ryan.
Yeah, so I mean, can we just follow your notes and just tag along with what you're doing? I mean, is that even a thing? Is that legal? Where you just say, hey guys, here's what my playbook is, and we just mimic you since you've already put in all the work and effort.
I know. I do have an AI bot that you can talk to whenever you want. It's on Delphi. A lot of you guys already know Delphi. So I have all of my consciousness, not really, I'm kidding, but I have a lot of my 20 years of notes downloaded into the Jeremy Newsome Delphi bot. But to answer your question, there are legalities to certain things I can and cannot do, right? Rick would know this for sure, but there are very gray areas. And the most gray area specifically is I can write a newsletter, which I do have. Keeping in mind, I did sell the company, so I'm not actively participating in it as often as I used to. But just to give them a shout out, because I'm very, very active in this community and I love it. And this was my baby for 10 years. And you know, I had a MRR of $400,000 for a few years, if that's interesting to anybody here. The education's free. Like, it doesn't even cost money. And the thing that I built a very, very large base on was a newsletter. So if you guys do have any interest in newsletters, I do have a newsletter that's phenomenal and it comes out every single day. And so to your point, yeah, right. You can just kind of follow along with my general thoughts, check out a newsletter once a day, read it for 6 whole minutes and buy what I'm buying and sell what I'm selling and buy where I'm buying and sell what I'm selling if you want to. And if you don't want to, that's also okay.
Jeremy, I have a question on bots in general. You know, there's a lot in the market and they continue to come online. Like I heard an ad for one today called Oracle, where like, you know, you just put in your information and they're studying, you know, with AI, like the 19,000 companies that are in the market and all geared towards things that are about to have a jump, you know, 20%, 30%, et cetera. and just kind of tells you when to buy and when to sell. Is that what Delphi is? I'm not familiar with that one. And would you recommend that to someone, or is that all just like a little like low touch and you're not going to really get the investment return that you want?
That I'll answer both questions. Yeah, Delphi is literally just a cloning tool for creators. So to Ryan's point, like Ryan loves AI stuff. I have a Delphi bot, and it's just something you can ask questions to. Is truly answer. So if you just go to delphi.com and type in all kinds of people, and I'm one of the people on here. But there's a lot of other people. I'll post my link later. I don't know why it's not popping up right now. But there's like Brandon Bouchard. Like you can ask them
Oh yeah,
questions.
Ben.
Our,
Yep.
our boy Ben, right? You can ask him questions. So it's cool. To answer your question about bots, Scott, 99.999% of them are really good marketing schemes because they're not AI at all. They are API interfaces that use some type of indicator that just simply create an indication of buy and sell, and they take that API and they plug it into a trading software like Interactive Brokers or Charles Schwab. That's not artificial intelligence, right? That's just literally, oh, this thing said buy. So now they have a webhook and it's boop, just plug it into the software and that's it. And so it's not this thing they're learning. It's not something they're studying. I've built hundreds of those and I give away all of them for free. The bots are easy. Cause guys, here's the truth. The truth is the deals are not the hard part. Deals are not the hard part. In fact, the hardest part in real estate is finding the deal. The easiest part in the stock market is finding the deal. Trades are everywhere. And 99.99% of bots, again, they're just good marketing schemes. They work okay. They probably do okay, but you're going to pay them a bunch of money up front. They're going to give you a little bit of a return. You're going to be pretty happy with it. And that'll be that. I don't like most bots. I think most bots are probably scams, truthfully. Or at least they're not what they're claiming to be, if it's a better statement. And you can absolutely put some money with them. And some of them will probably work and most of them probably won't.
Fair enough. Yeah, that was my guess. Anyway, but awesome.
Yep. Love it. Love it. Love it.
Good
Yeah.
question.
Again, Justin, thanks for mentioning that, man. Just text me, my brother. And
I
I'll
just-
post all this on the WhatsApp group. Again, I love working with Carrie. I'm not going anywhere. I'm right here. This is something that's going to be a really, really remarkable process. But ultimately, I think just being aware of how some of this stuff works is really, 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 really incredible. Because I do want to share a Tesla chart with you guys, because I think that this is a super, super cool opportunity. Tesla right now is getting absolutely roadhoused, but it's about to be down 43%.
Damn.
Which I don't know if you know this, but imagine if you wanted to buy a Tesla, like back in December, the vehicle, right? And you were going to spend $68,000 buying the vehicle. And 2 months later, you could buy it for 50% cheaper than that. Are you excited about buying that vehicle?
Heck yeah.
Probably. Because individuals are trained to be consumers, which sounds crazy. I'd rather you all be owners, right? Owners versus consumers. Buy the actual company, buy the actual stock, own the actual investment. Because yes, I did make some good money on this little move right here. And yes, I am losing some unrealized gains, but you can all believe that I have a really, really good collar on Tesla. So even though it's dropping, I'm protecting my downside. I'm not selling my shares, but I'm still creating cash flow to pay for my family and to pay for all the things we want to do in life, even though Tesla's going down. And I think that's just the coolest little nugget of information to be able to use. And again, you can use this in traditional IRAs if you wanted to. I'm not saying you have to, I'm saying it's available. You can use it in SEP IRAs, Roth IRAs, regular brokerage accounts, margin accounts. It's really, really fascinating tool. And I love it. I love it. I think it's so much fun. And none of us have to be extremely, extremely smart to figure out second grade math, because it's all, where do I want to get out? Where do I want to get in? How long do I want to hold? Why am I buying the company? You answer those 4 questions, you're going to do okay.
Yeah. That's some gold. I mean, I don't know about you guys, but I'm pretty fired up about this in the cohort. Jeremy, I think I put the proper link.
Yes,
Is
you
that
did.
okay?
Yep,
just
you nailed
found
it. Thank you. I'll just share that because I did have that on my, but this is it. Again, we're just to cover the details that are actually probably most important. We start April 8th because time is your most valuable asset, gentlemen. I understand that. Money is your least valuable asset. But if you have a bunch more of it, you can start buying more of your valuable assets, right? I think we all can agree on that. So this is probably the most important information to know. April 8th, that's when we start. Tuesday, Thursday, Friday, 11 to 12 Pacific. I do record it in case you can't make it, duh. But I really do a lot of hand holding. I answer extremely specific questions, and I do tell you exactly what I'm buying, precisely why I'm buying it, and how I'm structuring the position so that I can either lose very small or win very big. But more important than you guys following me, and thank you, Ryan, but more important than that, I give you the power, I give you the control, I give you the knowledge because I want you to be fully capable of all this, regardless if I exist or not. Is that fair for everyone?
Yeah.
That's really my ultimate goal and objective. And of course, I made on Tuesdays, Thursdays, Fridays so that you guys never miss my boy Carrie Jack on Wednesday, baby.
Let's go. Wednesday. All right.
Jordan.
Jordan.
Oh yeah, sorry, I know we're getting to the end of it here, but and this isn't me expressing skepticism. I'm just curious because like you always hear, they've done studies, statistical analyses of like stock pickers and found that, they don't. Oh, okay, you're ready for this one. That, like 95% of mutual funds don't beat the index over a 10-year period. Correlation coefficients between pickers at top companies are like 0 year over year. So like, why are all these other people getting it wrong if it's just about taking like 50 hours to learn the trade?
So, three statistics I think are very, very important, Jordan. And you mentioned most of them. I do like the fact that 95%, right? So you mentioned 95% of mutual funds fail to beat the market. It's actually 100%. No mutual fund beats the market because mutual funds are too diversified. That's money managers that don't beat the market, right? 95% of money managers don't beat the market. Now, that's just according to Tony Robbins and Money Master of the Game. I don't know if the statistic has changed or not. You will also hear tons and tons of times that 95% of individual retail traders also fail to beat the market. So you have retail traders, you got, the professionals, you have all these people. When I hear of 95%, I hear that 5% of people make it. Which if you're thinking about any other business, 5% is huge. If I said that if I create a gym, Jordan, where 5% of every person got an NFL contract and got paid money, 5% of everyone that came to my gym had an NFL contract, or soccer, or input any other company, right? If 5% of restaurants made it, if 5% of businesses made it, good Jesus, right? Like, so I think we all know that it's like around 1% or less of anything that's really successful that actually goes and crushes it anyway. Now, second point, and this is the one that's most fun. 100% Jordan, you are correct. And I can let you all know this, that I think if you wanted to just be the market, you can just buy this.
SPY.
Jordan, this is the SPY right here, baby. This is the S&P 500 ETF. So you can buy this, and this is the benchmark that everyone's trying to beat, right? That again, to your point, 95% of people don't. So you could just buy this. Now, here's the best part. Not only can you buy this and you can own it and just, again, do really well long term, do you think you can still do covered calls and callers on the SPY? And the answer is yes. Because if you sell one covered call and bring in an extra 0.5% a year, you're beating the market every year. Technically. Now, again, you're not beating it by a lot, but you are beating it. And the truth is, Jordan, most people don't have the patience to do that. Most people don't have the patience just to buy SPY and just leave it alone forever. And then when you feel like it's a good time to do a collar, you get into a collar, like, I don't know, 2 weeks ago, right? Right here or right here or right here. if you got into a collar on those three prices, you made an extra 5% already this year, which is remarkable. And now you can just sail into the sunset, right? You're good to go forever. So I think it's just a really interesting concept that you can just buy the market, the thing that most people can't buy, and you can still do this tool and you can still make even more returns. And I don't think most people have the patience to do that. And that's probably why most people are that 95%. But you're not, Jordan, you're not going to be in that 95% of anything that you do, right, brother? Everything you've done in life, you've been in that 5% anyway. So might as well make a bunch of money.
Well, it's funny. It's not my show, right? But how I would answer that, right, is what Jeremy's talking about. Is we know the market's cyclical, right? So what most people hear is who's going to get that right stock pick, right? Who's going to get that right stock pick and kind of hold that for a long time. This isn't saying I'm going to pick better stocks than someone else. This is just saying I understand the cycles, and that's what you're playing, the cycles more than the stocks.
Correct.
Is what it is. And that's how you make money. So like what he said before, it's funny because I'm probably a good middle ground, if you will, because I'm not I'm more of the traditional planner. So I'm not the day trader type, but I let's just say I think I'm a good bridge. But it's the cycles. And one of the things he mentioned, he's not trying to time the perfect bottom or try to find the perfect top, because no one can do that, right? Warren Buffett can't do that. But it's the reasonable expectation. That's why he started with DraftKings, before the Super Bowl, before March Madness, right? There's a reasonable expectation that's going to go up. So you get into it, and then you put that block, right? That if it comes back down, you kind of protect your losses. Where the only risk, and correct me if I'm wrong, Jeremy, is I assume, again, when you buy into the contract and you buy the insurance, if the market's somewhat flat, which it rarely is, but the market's somewhat flat, then you paid for the insurance, you didn't get that. But right, so that's okay, because that's like a limited loss with
Correct.
say almost unlimited gain.
Correct.
The question is because again, this is not what I do every day for my clients. When you get in immediately, like, can you immediately have some sort of protection that, let's just say the market goes down, X%, and you get in and out and you lost that trade? Like you don't have to wait for it to go up before you put that call in, correct?
Right. Yeah, that's absolutely 100% correct, Rick. And to your point, my man, I will just throw this out there because I would love to work with you in the sense that I've worked with probably 1,300 RIAs, financial planners, CFP, CPA, all big firms. I got 4 people that have $1 billion of AUM that I consult on a monthly basis, just so that they know how to do this stuff. And I work with 2 hedge funds because it has nothing to do with me. To your point earlier, the skills of the game. You can absolutely 100%. Let's pick NVIDIA. If you said, man, I think NVIDIA is going to go up on earnings tonight, like in 35 minutes, they release, guys. If you bought NVIDIA right now and bought an insurance policy right now, you could protect your downside. And if they crush earnings and they come out up here, we can all see that this potential return is bigger than the downside risk. So as soon as you buy a policy, as soon as you buy a stock, if you wanted to buy an insurance policy on it, you can do so simultaneously. And not only that, but you could also buy the insurance policy for a shorter period of time and then do a rental contract, Rick, for a longer period of time and get a net credit so that the insurance doesn't actually cost you a bunch of money up front, so that your cost basis is relatively flat and the beta is essentially the price of the stock. And then you have a bunch of upside that you can capture if it does go higher.
Yeah. Yeah. So the takeaway, right, let's say for the novice investor, is there's some risk, right? If things just go the wrong way, and right, so you can lose some money. But what I would say is if you're at risk of loss of 5 or 10%, but the potential upside is, 400%, right? If you play enough of those, you'll win more than you lose.
There you go, brother.
That's it.
Kerry, you're amazing, man. Thank you for giving me this platform, this opportunity.
Thank you. Guys, this was amazing. For everyone watching the recording, holy crap. You missed asking your question, but Jeremy, if you can, put in the WhatsApp chat, your link and all the details. Also, Rick, if you don't mind, put that opportunity you were talking about, a little write up and maybe a link worth more into, because I'm interested in that too. I feel like all the guys.
Well, it's funny, I started typing when I got distracted, but maybe I'll do that because and the truth is, it's yin yang. I'm going to join your class, by the way, Jeremy. Like I looked at the website. I'm going to join because here's why.
Thank you.
I've been trained for 16 years by the institutions how to do it, right? And I know, let's say the traditional approach, we can't do this for clients, right? The reason why Jeremy's not just saying,
Correct.
hey, give me your money, I'll do the trades for you, we're all fine. You can't take that much risk with other people, because if it goes wrong, you know, things get sideways very quick. But like you said, like you're selling the education, which is way more valuable, right? So it's much more important over time.
Right.
But there's a bridge there. There's a bridge there of, you know, a happy
both.
medium, so to speak.
Right. Casey, did you have something? Or
No, I made a mistake. You talked about your money bulge, and I'm putting the comment Carrie's bulge is larger than average, and accidentally sent it to Scott. So I totally fucked you, tried to give you props, and it only went to Scott.
That's awesome.
oh,
But
geez.
Jeremy,
Oh,
dude, like my mind's certainly blown today. So
Makes me happy.
I've got a ton of freaking questions, and like I'm like, dude, I don't even know where to get started with him, but thank you so much.
text him. Jeremy will hop on. Hey,
Or
Jeremy,
maybe put them in the
Casey's a good guy.
WhatsApp so we can all learn from what you're asking.
Yeah. Yeah. Ask him in WhatsApp too, man. But for real, you two should connect anyway, because Kaysen has a massive accounting firm with a ton of clients that could benefit from this too. So he could be a good affiliate source for you too.
Yeah, let's connect, dude. I'd love that.
Yeah.
Got it, my man. We'll do.
All
Carrie,
right,
thank
y'all.
you.
This was
Gentlemen,
awesome.
thank you.
Peace and love, gentlemen, and have a blessed day. Okay.